Yes, yeah, hi, good evening, everyone. My name is Jackson. I'm the branch manager with Philips Securities. First of all, I must thank everyone for taking your time to attend these sessions and hope you have actually taken your dinner. So for these sessions, we have invited the speaker. His name is Mr. CKE. He's the chief trainer from Asia Chart. For today's, he will be actually covering on this topic, how chart can make you a better investor. Over to you, CK.
All right, thank you. Thank you, Jason. Let me just share screen. Just give me a minute. All right, good evening, everybody. Are you able to hear me loud and clear? If can somebody type in the chat box so can comments? Make sure there's no echo. If you can hear me, just give me a thumbs up or just type in the chat. Thank you, thank you. All right, good. Thank you so much. Yeah. Now, today I'm going to share with you how charts actually can actually help you in your decision making as far as investing or trading is concerned. But I thought before that, let me just show you the disclaimer first. Now, it's actually quite lengthy, but I'll summarize for you. Now, whatever I share with you today, if it seems like a tip, sound like a tip, and smell like a tips, remember it is not tips. It's purely educational. And whatever view that actually I presented is my personal view. All right, so not with Philips Security. All right, so it's my personal opinion. Is it okay? Now, who am I exactly? At least know a little bit about myself for those people who actually hear me for the very first time. I'm more technical traders, so I'm a swing and intermediate trend traders, which means that actually I do not hold long-term positions. I do have some passive positions, all right, but primarily a medium-term traders, swing and medium-term traders. Focus primarily on growth and momentum stocks. So those stocks that can run. So stock that actually cannot run is not in my radar screen. And I founded a company called Asia Charts with two like-minded individuals in 2006 to try to fill the gap in the industry in terms of educations, in terms of quality educations. And together with my associate, we train more than 10,000 students in Singapore, Malaysia, Indonesia, and Vietnam. All right, this is my philosophy. Very important. Align yourself with the market. You must understand the behavior of the markets, align with it. And you have to be very honest and truthful to yourself because you cannot fake it. The result will show one. If you're not suitable for long-term investing, do not try to do that. If you're not good in short-term trading, don't try to do that. Find something that is more in line with your temperament and personality. All right, that's my belief. And you got to develop the very basic but critical money management skill. Now, this money management is actually quite basic, but unfortunately, most people do not have. And of course, last one is the mindset. The mindset must be right. So a lot of people actually underestimate the importance of trading mindset. Okay, so this is my trading philosophy. Now, before I go further, I need to understand a little bit about the background of the participant here. So I'll adjust my presentation accordingly. So a very quick survey, but I really need you to actually type in the chat box so that I can adjust my presentations. And end of the day, there's a Q&A sessions. So you can also ask me questions. Okay, very quickly, what kind of trader or investor are you? So A, B, C, D, E, F, stock, futures, forex, ETF, CFD, or others. So if you, let's say, for example, stock and future, just type A and B. All right, can you all type into the chat box? Thank you so much. A and E, okay. A, E, A, okay. A, a lot of stocks, huh? How about the rest? Okay, thank you, thank you. Now, if everybody can participate, that'll be very useful, because actually, the more we interact, the more value you get. Okay, thank you so much. All right. Question number 2 is, what kind of trader investor are you? Are you more purely fundamentals, technicals, techno-fundamental, which means it's A and B, right? Or D, others. Others would be maybe you subscribe to newsletter and you receive recommendations. So A, so okay, A, okay, D, okay. So we got quite a number of A, which means actually I have to probably go a bit slower. Because I mentioned I'm more technical traders. But whatever it is, chart will help you in your fundamental analysis. So you have C, which is techno fundamental. So you can see actually if more people respond, then I need to know, I know better and I adjust my presentation accordingly. Okay, how long have you been trading or investing? Less than 1 year, 1 to 5, 6 to 9, or more than 10 years? B, C, okay. Okay, B, D, okay. We don't have A, all right. Any more? So hopefully this is a good enough sampling size. All right. So we can see there are a lot of people focus on fundamental analysis. So I will later on, if you have any questions, please feel free to ask. I'll try my best to answer your questions. Before I comment, just want to present you this quote from Dr. Van Damme. Dr. Van Damme happens to be my mentor. He's one of the market wizards. Due to misconception in the media and the financial fields such as Wall Street and academia, most people do not really understand the core principle of good trading. So this is a market wizard, which means he's actually a very successful trader, but he's more like a trading psychology educator. All right, it was featured in a book called Market Wizard. And this is why he said that due to misconception in where Wall Street and academia, and these are the places where people tend to actually go there for advice. He said there are a lot of misconceptions there. Most people do not really understand. So that's a very serious statement when you actually come from a market wizard. This is Peter Lynch. I think most people will actually familiar with him. He wrote a book called One Up the Wall Street. And they're very successful money market managers. And subsequently, when he retired, the fund actually didn't perform. Right? He's a very successful fund manager. And this is what he actually wrote in his book. The amateur investors has many built-in advantages that could result in outperforming the expert. Rule number 1, stop listening to professionals. All right, so do you need to tune into CNBC, CNN, Bloomberg News, or this thing? No, I don't. I don't, seriously. If I ever watch, it's really out of curiosity. I have the channels, but I don't watch them. Is it necessary? Actually, to me, not really necessary. Not really, because it's not useful. All right, but I do know people who like to tune in and watch and read the news and stay until very late at night. To me, it's really not necessary. All right, but I'm not saying that whatever they say is all nonsense. No, it's just that it's not necessary. Okay, let's quickly jump into it. We had about 1 hour odd or so. So I want to actually make sure you get good value from my sharing. So again, I have packed a lot of stuff, so I'd like to actually jump quickly into it. Market refer to any financial markets. It doesn't matter which market you're looking at, Singapore, Malaysia, Hong Kong, US. You're looking at the bond market, you look at foreign currency, it doesn't matter. Markets refer to all this. Markets is always in one of the flowing stages, and there are 4 stages, all right, in the cycle. So remember, market is always in an endless cycle. Whichever market, doesn't matter. Endless cycle. 4 stages. First stage is called basic. Second stage is called advanced. Third stage is called distribution of 4th state decline. It's always easier to look at a diagram. Okay. So here we have the basic stage. Okay. This is stage 2 advanced. If you want to call it bull market, that's all right. Stage 3 distribution is very choppy. Stage 4 decline, if you want to call it bear market, is also okay. And then go back to basic. And the cycle will just repeat. The next cycle could be taller, could be shorter, could be broader, could be narrower. It doesn't matter. It is always in one of these 4 stages. Spring, summer, autumn, winter, and go back to spring. Is it okay? 4 seasons. So markets just operate like this. Okay? But unfortunately, most people lose money on the way down. Why? Why they lose money? Because they like to buy cheap, and cheap get cheaper. All right? Unless you are well diversified, the stock that you invest in may not recover and you lose tons of money. And this happens all the time, not just in Singapore, worldwide. Okay? So remember, it's always 4 seasons. And the next season will come again. Right? So you must know which season it is. Nobody plant crops during winter phase. Is it correct? This is a winter phase. Nobody plant crops during the winter phase. But a lot of people like to plant crops during winter phase, including institutions trader. All right? And they lose tons of money. So here, stage 2, you go long. Stage 4, you sell short. If you don't know how to sell short, stay cash. Is that all right? Stage 2, you buy. Stage 4, sell short. Don't know how to sell short, don't buy, stay cash. So never stay in 1 and 3. 1 and 3, don't stay there. It's very choppy. It's a waste of time. Stage 2, long. And stage 4, sell short. Okay? Now, here we have a securities with intermediate cycle. All right, so you can see this is a cycle, no? All right, this is an intermediate cycle. All right, can you see that? So this is your spring, this is your, sorry, this is your, what do you call that? Spring, summer, autumn, and then winter, and you go back again. So these are intermediate cycle. Now, you can always plot a primary cycle. So in this case, this is the primary cycle. This is your primary trend. Now, you can also have mini cycle here, no? I can draw this. All right. So you can have mini cycle within the secondary trend. The important thing is which cycle are you trading? Which cycle are you operating? That's very important. Because if you operate with no understanding of the time frame, then you may end up doing the wrong thing. Because short, medium, and long term buy, sell, hold are different. Is it okay? So here we have a security. It's a raw. So very obvious, you can see this is your basing stage, and this is your stage 2 advance. There's your distribution stage 3, and then stage 4 decline. And you will just repeat. Okay. So of course, along the way, you'll find that actually you wiggle, but generally you can see the direction of the movement. And you go back to actually basing, and the cycle just repeat. So here we have another example. Here we have stage 1, stage 2 advance, stage 3 distribution, stage 4 sell down, stage 1 again, and then you go back to stage 2. All right, so again, remember stage 2, you buy, stage 4, you sell short. Now we have no idea you're going to actually base and recover. What if you don't recover, go all the way down, and you're still holding, you're in deep troubles. Clear with this? So market is always in the endless cycle. So if you know which part of the cycle you are in, for example, if you buy a security and you know which cycle you are in, you're better positioned one. Okay. Next thing is that focus on the advance and decline. In the advance is actually the uptrend, uptrend stage. Initial rally after accumulation start the uptrend. Now later I'll show you the detail, not to worry about the text. You'll form pattern like high, higher lows, confirm trend. In the downtrends, that happens after distribution, okay? Start the downtrend. All right, start. And you have this behavior of lower high and lower low. Take a look at this is easier. So remember this one come out from a base, stage 1, and it went out from a high, from a low, higher high, higher low, higher low. So you see successive higher high, higher low like this. Okay. This one confirm uptrend. So again, remember, it depends on the time frame. So you can see that on the long term, you can see that on the medium term, you can see that on the short term. This is downtrend. So at the top, when the stock distribute, fail, this portion here, start the downtrend. And you have low, high, lower, low, lower, high, lower, low, lower, high. So basically you see like this. And it's not difficult to see, no, as eventually I'm going to show you how to actually identify this type of thing. Okay. Now trend can be classified uptrend, downtrend, which I just showed you. It can be a trading range where there is no change in price. Now, trend is enforced as long as it's a series of high, low, or still the market is continue. Will likely to continue. So let's say, for example, here we have trend. All right. And if the stock exhibits behaviors, our buyers that is likely to continue up. Is it okay? Similarly, if the stock has been doing this, sell down, all right, then our buyers are you continue to go down. For those people who observe the charts long enough, you realize their stock can run for years all the way up, and their stock run all the way down for years. Anybody has observed already? So this tend to be actually true one until evident to suggest otherwise. Now trend It's useful to use trend line to identify. Uptrend, we connect a series of bottom. Downtrend, connect a series of peak. Again, not to worry about the text, because I'll show you diagram. Trend line may be horizontal, containing a series of peak and bottom of a trend range. A trend line must connect 2 points. I'm going to show you a simple example so you can understand. Let's take a look here. Here is uptrend. In this case here, uptrend, connect 2 points. All right, so to actually draw trend line, you need to connect 2 points. Is it okay? To confirm, you need 3 points. To draw 2 points, to confirm the trend is 3 points. Okay, so in this case here, I can draw, and here I confirm. This is here, 4 points. Okay, the more point connected, the more significant. Same. On the downtrend, you create the top. You create the top, 2 points to connect, 3 points to confirm. All right. Simple. For example, uptrend, connect 2 points, 3 points to confirm. Now the trend can accelerate, and you see the angle gets steeper. Okay, like here. Okay, now this is down. Connect the top. Now you notice here I also can connect. So these are just the intermediate, right, trend. In the sideways markets, in this case, a trailing range, you connect the top and the bottom, then you have horizontal trend line. Is it okay? Like this. Connect the top, connect the bottom, horizontal trend line. So for anybody, any questions? Again, if any question, you can type to the chat box. Now, how to identify trend? Yeah, very simple way to do it. In fact, it's simple. So if you use it, you cannot be so wrong. Trending markets, uptrend. So I'm going to use a very simple indicators, moving average. I think majority people may be familiar with that. Right? It's powerful. So in an uptrend, price above moving average, and the moving average is sloping upwards. In a downtrend, price is below moving average, and the moving average sloping downwards. In a ranging market, which is sideways markets, price crisscross the moving average, and there is no slope. Again, I'm going to show you an example so you can relate to what I showed you in the previous slide. So in an uptrend, moving average. Now, your moving average, again, it depends on the, what I call that, the time frame you are looking at. If you look at medium terms, you can always use something like 20, 30, 50. It doesn't matter. All right. If you're short term, you can use 10, you can use 13. If you're longer term, you can use 100 or 200. Simple moving average. Okay. So in this case, I actually show you a medium term. All right. So price above moving average. So you can see these are the price bar, and it's above. And I draw the circle to actually show you that it's actually above the moving average. Right? And then you can see the slope is sloping upwards. So in this case, this is uptrend. So in an uptrend, you can go and buy, all right, but you cannot sell short. You can buy, okay? Right, sloping upwards. Yes, uptrend. Now in a downtrend, price below, and I draw the circle again to actually show you that it's actually below the moving average, and the moving average sloping downwards, and that's downtrend. So in the downtrend, you cannot buy, but majority of people will buy. Why? Anybody want to venture to offer the answer? Well, a lot of people like to buy and the downtrend. Anybody? It'll be good to have some interaction. At least I know you understand. Anybody buying the dip? Yeah, but why will the reason buy average down? This is what they do. But why do you think people like to buy? Good deal, yes. Good deal. Cheap, yes, cheap. Because it's ingrained in us, in society. Whenever we buy something, we always ask for discount. Am I right? We always ask for discount. We are very bargain one. All right, we don't want to pay more than necessary. We always look. All right, now you go with internets, right? You can go and search, all right, which of the, what do you call that, provider offer the best price. Okay, so I like to buy cheap. So it's ingrained in us. All right, we like to buy things cheap. But in the market, you will lose a lot of money. So market is counterintuitive. I don't know whether you know or not. For those people who have been market long enough, probably can understand. Market is counterintuitive. Don't use your logic. Use your logic, you lose money. Guarantee. Guarantee. Lose money. Okay, so that's the reason why just how Dr. Van Dyke mentioned, right? There are a lot of misconceptions and things like that. And a lot of people think that is gospel truth and they follow until they got burned so badly, they realize, hey, whatever is said doesn't seem sound. By the time they really lose a lot of money. It happens all the time. Generation after generation. Generation after generation of investor for umpteen years already has been losing money. Right? They like to actually follow all those recommendations which they actually gather for free. And it's unfortunate. So it's counterintuitive. You buy, you're actually losing money. So when it's actually trending sideways, no trend, require ranging market, price crisscross the moving average, you can see the price below, above, below, above. And then if you look at the moving average, generally it's actually flat. So here is a waste of time if you actually buy. You're not going anywhere in the price. Okay, no trend. The next important concept you need to understand is support resistance. Resistance is a price level where the selling is greater than the buying. And support is a price level where the buying is greater than the selling pressure. And support turn to resistance. Resistance turn to support when it's broken. Again, I will show you examples so it's easy to understand. End of the day, you need to understand the market, right? The price move is because of what? Don't make it complicating. Demand and supply. Is it okay? Price move because of what? Demand supply. And when there's an imbalance between demand and supply, it moves. If the demand supply are balanced, right, then the price will move. Clear with this? So once you understand this, right, then a lot of things actually don't need to know one. All right, so price move up. Why? Because there's imbalance of demand supply. In this case, you have greater demand than supply. Then what is available? People are just chasing stocks. Same on the way down. All right, selling pressure is greater. Imbalance between demand and supply. All right. So what happened was they don't tell you this, but actually at its core is really the buying and selling. At its core is the buying and selling. So because of this, it created support resistance. Okay, which are useful. Let's take a look. This is venture in the past. So here was a test before fail, and there was a test again, it failed, and the test again, it failed. All right, because people can see this is a price level that was never exceeded. So if I buy something here, when it reaches level, I will take profit. Am I right? So when it drop again to this level, I'll buy, and reach this level, I'll sell again. So then to actually repeat one. Okay, because why? People can remember. Same again, it rallied to this level, it failed. It was tested before it failed. When it rallied agrees the same level, if I bought here, I will sell because I can see that. All right. And it rally again. If I bought, I will sell. Until it's broken one fine, then we see a change in the dynamic. Okay. Before that, then this is something important to observe. People can remember the price they pay. Support. When the price drop at certain levels, buyer think is bargain, they go and buy. Insufficient number, they buy. Now, when they come back here again, people who missed out in the past will look at this. Hey, last time I forget, buy, move up. So when they come back to here, they'll tell themselves, this time I better buy because last time I forgot. So here they buy, move up. All right, same if they miss, they will remember, hey, last time I didn't buy, it move up. So I'll buy. So people remember the price and they'll go down to what? Bargain hunt. So again, here we have a support levels that was tested and people can remember. And one finding when it's broken, then the dynamic has changed already. Something must have shifted the perception before this thing can happen. Now, just mention a support turn to resistance, resistance turn to support. So in this case here, we have a resistance that was broken and it turned to support, it tests. All right, and then when it sell down, it actually at this level, it actually tests again. All right, and bounce off again. So the previous resistance right now is providing support. Now, this support level was broken and right now provide resistance, support turn to resistance when broken. Now, all again is because people remember the price. Right? So because you remember the price, they tend to what? Self-fulfilling. People tend to act on that level. Here we have another example. This was a previous resistance, broken, becomes support. All right. Against a support. When it's broken, this is a support, turn resistance. Okay. This is Brent crude on the weekly charts. Very obvious, you know. Can you see the resistance level? Support, resistance, 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 support, resistance, support, resistance, support. All right. Again here, the support level. So it tend to repeat. So in fact, right now, Brent crude is actually trading between here, between the 70, 85 levels. So maybe stuck there for some time. Now, bargain hunter will buy a support. They look at the previous past and they think that is the value and they buy. Profit taker will sell a resistance because they observe in the past, right? When we reach the level, they will sell. Now, breakout occur when the stock break support resistance. Now, are you familiar with this term of breakout? Came across this term breakout. So this is loosely used. So breakout happens when they break support or resistance level. Here we have an example of a stock on the way up, stage 2. This is stage 1, stage 2, and then here stage 3, you go down stage 4. You can see that it actually he hop from one level to another level, one level to another level, one level to another level. So the breaking of the resistance, we call it breakout, breakout, breakout. Is it okay? Same, vice versa. When you break the support, we call it breakout, breakout. We don't call it breakdown. All right, there's no such term called breakdown. Okay, so in this case, it break out, but it's on the downside. Breakout on the downside. It's still called breakout. Here we have another example. iFast, you will be very familiar. Breakthrough resistance, breakout, breakout. In this case here, whatever we have a distribution formation, break on the downside, breakout, 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 breakout. So you notice the cycle. This is the up cycle. You trade sideways, stage 3, and then you go to down cycle. So this is stage 2. Remember, this is stage 3, and this is stage 4. Are you okay with this? Can you remember no? This is the cycle we're talking about, no? So stage 2, you buy. Stage 4, you sell short. If you don't know how to sell short, stay cash. Is it okay? Don't go in bargain hunt. Okay, in bargain hunt, there's only one way they can help you. That is if you have luck. But you run out of luck, the market don't recover, you'll be dead. Okay? Any questions so far? Oh, this is important. When market take a rest, what happened? When a security, now are you okay with use this word security? I only concern those people who are new. Some people who are new to investing, when look at this security, a bit confused. What is security talking about? Security means all financial products. Understand? So when you read a TA book, when it says security, you will remember it can refer to stock, it can refer to forex, it can refer to bond, commodity. It doesn't matter. So they use the word collectively, security. So when I say security, it will mean any financial products. When a security stop trending, it go into a transition period. Chart pattern tend to form during this period. Now, chart pattern give information of subsequent price movement, and chart patterns in the past are likely to repeat. Now, this is important. No? When the security stop trending, it go into a transition period, and pattern tend to form. Transition. Just give me a minute. Now, what happened was that when the stock is trending, it make high, low, higher, high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high, higher, low. Now, you notice just now there was a particular phrase which I emphasize a lot. When a security stop trending, remember this, huh? When a security stop trending and go through a transition period, pattern tend to form. So this is something which a lot of people may not understand. This is trending. When it stop trending, when it stop trending means what? Stop making high, 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 low. No. Let's say, for example, same high, same low, same high, same low, same high, same low. You form pattern. There's a pattern. High, low, high, 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 low. When it stop trending, high, low, lower high, higher low, lower high, higher low. Stop trending, you form pattern. In this case, triangle. High, low, high, 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 low, high, 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 low, higher high, lower low, high, high, lower low, high, high, lower low. You form pattern. In this case, bottoming pattern. Trend, high, low, lower high, lower low, lower high, lower low. You form pattern. So the key word is when it stop trending, you'll go into a transition periods, and you tend to actually form pattern. This statement here. Pattern tend to form during this period. This is a very important statement. Now, once you understand this few things, don't want to make things complicating, then a lot of things become very easy. I won't say simple, huh? You still need effort, huh? But at least you're not confused. Okay? Now, pattern can be listed, smaller price range. Listless. Right? It doesn't seem to go anywhere. Volume is significantly lower. These are characteristics. Pattern can be classified reversal or continuation. Reversal or continuation. Right? Let's take a look. Rest. Move up. Rest. Move up. Rest. Stop trending, no? Rest. And then you move down. Rest. Rest. So when you stop trending, you form pattern. Is it okay? When you stop trending. So the first kind of pattern we already discussed is rectangle. All right, it's a region bound by support and resistance line at the top, at the bottom. Continuation of that. That means it happens within a trend. Now remember, when a stock run, they don't run. This is a cycle. This is a cycle. Now remember, you don't run this way. You run in zigzag fashion, uptrend, like that. Understand? Then after a while, you rest. Then after that, you run again. All right. Then after that, rest. Then you run again. Then rest. Then maybe you go down. All right. So it's just like we just draw schematic like a smooth line, but it's actually in actual fact it's like this. In actual fact it's like this. So once you understand, you know where you are. It actually are very useful. So the first pattern is rectangle pattern. Let's take a look at this. So you notice the stock run up, it rests. When it rests, you form pattern. Are you okay with this? Can you understand this? You form pattern. In this case, rectangle. Here we have another example. The stock actually run up and then it rests. So remember, this is transition. It's resting. Here we have a stock going down. All right. After that, going down for what? You rest one. Then after that, you break. But a lot of people during this period, they actually go and buy. They go and buy some more and gone. This is Sam Marine, Sembcorp Marine. And I know a lot of old timer hold this stock, and now it's junk. Okay. Okay with the rectangle pattern. It's very common, easy to see. Next thing is head and shoulder pattern. Usually occur as a reversal pattern, meaning at the top. It can be at the bottom also, but it's a reversal pattern. Signified change in trend. Volume contract on the right shoulder indicate weakness. Now all this I'll explain to chart easier to understand. Volume contract on the right shoulders, trend line connecting the low of the left and the right shoulder are known as trend. The neckline. Now volume is heavier on the right shoulder for inverted. Again, not to be worried about those things here. I will show you diagram, easy to understand. So this is what we have, a head and shoulder pattern. So basically, you have a head in the center, left and right shoulder. Okay, so mention actually volume tend to be low on the right. In this case here, if you notice the volume is quite low. That means it's a weak rally. This rally is weak. Weak rally. Is it okay? So here we have a weak rally and it failed. the point here and here where you connect, it is called a neckline. Okay. Here, example, again, you have the head and the shoulder pattern, head and center, left and right shoulder. And on the right, you can see the drop in volume. This represents a weak rally. That means the odds of it going down is very high. And you cannot the low points between the left and the right shoulders is 2 points. You draw it, this is called a neckline. So basically, if I draw a schematic diagram like this, it's like 3 mountains. Is it okay? You connect the low here, the 2 valley, you connect. This is called a neckline. Okay, so basically it's like 3 mountains now. And the shoulder on the right side, the volume low is a clear sign of weakness. Any questions so far? Now you can do the opposite. So when the stock actually move downwards, you can do this. Okay. Now the only difference is that the right shoulder, the volume increase. So what does it mean? It represents strength. So volume, if you find difficult to understand, you just take it as volume is like what? Force or energy. If you find difficult to understand volume, okay? So volume represents what? It's the same as force or energy. So you cannot move up with no energy. So you move up with a lot of energy. So you're getting what? Potential reversal. So this is the downtrend, this is sideways, this is uptrend, reversal. Is it okay so far? Here again, inverted shoulders. Right shoulders, high volume, indicates strength. Right? And you connect these 2 points. This is a neckline and it's broken. This indicates that actually this is a reversal. Okay. Now, head and shoulders sometimes appear as continuation. That means within a trend. In this case here, we have head and shoulder pattern. If you notice actually this portion here, the volume is lower than here. Very distinct. Very distinct. And it managed to actually break on the upside. It didn't go down, it break on the side. So in this case here, this become a continuation pattern. But usually, they are reversal. Okay, usually. Not always. Here we have another example. Head and shoulder pattern. And in fact, it was broken by recover. All right, so this is a failed breakout. And this is important message. Later, I have a slide on failed breakout. Why it's important for you to actually understand this. Okay. Next formation is double top, bubble bottom. Double top, bottom is quite similar to head and shoulder patterns. It's just that there's no head, that's all. It's like instead of 3 mountains, you only have 2 lah. That's all. Okay. So double top, bottom are usually what? Reversal pattern at the top, at the bottom. So double top, second top, significant lower volume indicate weakness. So again, the volume at the second of the top, the volume is low. All right, and then volume expand or subsequent decline. So when it's expand means what? It's sound down with force, and that is fear already. So double bottom is at the bottom. Second bottom, lower volume indicates selling is drying up. And volume expand on subsequent rally. Again, easier to understand this through a diagram. I will repeat and repeat so you can understand. So this is a double top. Remember, 2 mountains. Now this portion here, you notice the move. The move here accompanied with low volume. Very low volume. So this is a what? Weak rally, and it failed. So you connect the 2 points, this is a neckline and it's broken. And when it broke the time, you'll see the increase in volume. So there is heavy selling. Clear with this? So again, if you find it difficult to understand volume, just remember volume is like energy, like force. Here, another example of double tops. Again, the second tops, the volume is low. Indicate weak rally and it failed. Again, when it failed, the volume picked up. Again, heavy selling. Okay with that? We can see it at the bottom. Okay, we can see it at the bottom as well. So the bottom is slightly different. Notice this is the second bottom. Second bottom, lower volume. So what does it mean? It means the selling is drying up. Selling is drying up. Heavy selling here, and then test the low. Less volume means the selling is light. Selling is light, which means that this potentially could be what? It's an indication that actually the selling is over already, right? Nobody left to sell. If nobody left to sell, a little bit of buying can push it up. Volume pickup, very important, will push it all the way up. So these are telltale signs. Is it okay? Same here. All right. Notice the selling here, the volume can see a very high, and then subsequent here, lower. Look at the bar, very low. Dry up already. All right. And then here, move up, buying coming in already. So you notice there's a shift. There's a shift from selling to what? Buying. And this is where the institution will mop up the shares, mop up the security. Okay. Here we have another example. Very distinct drop in volume. Can you see it's so low? Again, the institution come in and mop it up, the volume increase, and it moved up. So in this case, this confirmed the reversal of the trend from down to up. Here we have example of double top, double bottoms, quite close to each other. So generally reversal pattern. Now, before I go further, anybody has any questions? Or you're already familiar with this? I can tell you just now the statement which I actually make about the transition period. When market rise, it form pattern. These are things which even experienced traders do not know. They do not know the essence of it. Oh, that is important. No? But a lot of people do not know. They know there's pattern, but they don't know why there's such pattern. Next thing is triangle. Now, I'll just share with you some common patterns. Once you actually understand some of these things, then you help you to understand the whole market easier. Next pattern is triangle patterns, continuation formations. So it happens in the trend, constructed with two converging trend line. Price fluctuate become progressively reduced as the volume shrink. This is important. This is the characteristics. And recently we have very powerful move, very powerful move in Singapore. All right. And it's very huge move. If you don't know what I'm referring to later during QA, I'll show you. Okay. Triangle patterns, three types: ascending, descending, symmetrical. So here we have a very nice example of an ascending triangle. All right. Take a look at this. The volume taper off. This is a clear sign. Then when it explode, the volume picked up, run up. Okay. Here we have another example, ascending triangle, volume dry up. Very important. This is a telltale sign. It is so quiet. You break up and run. Can you see this drop in volume? So when you look at chart patterns, you need to look at the volume. Very important. Here again, we have a triangle. In this case, a symmetrical triangle. Notice the volume drop off, dry up. And here, very distinct, low volume, break up, run. How do we use this to project the pattern tomorrow so that we know when we can enter or exit? All the selling have already formed a pattern. Now, what happened was that this take time to form, no? Assuming that the pattern is just here only, have not break out. And if you see this, will that be useful? Assuming you have not break out, you see this, will that be useful? What do you think? That's COVID can happen. In fact, later I'll show you COVID. They are very good stock to short, no? And they form pattern. Like what? Banks, no? Banks actually break, no? Very obvious one. And this pattern is for months, no? It's not like, oh, just suddenly I miss. No, if you have been monitoring long enough, right, you can see this formation. And later I'll show you an example. These are the things we know beforehand. We just say we don't buy first because you do not know whether it's going to break up or break down. Is it okay? After red line. After, okay. Also did, okay. Up to the red line, difficult to project after the red line. What do you mean project? You mean here? Here is not difficult. You just have to wait for this to trigger. Why I say this? Because it can break down. Right? Let's say you go and buy beforehand. Then what happens? You lose money. It can break down. Even though I have a bias, because the trend was previously up. I have a bias. And later I'll show you a very obvious example. All right? And you will know one. You will know one. It's just that you do not know when exactly you're going to break. You need a catalyst to trigger. What catalyst? Nobody knows. All right? And some of them is pretty obvious one. Sometimes it's earning. Okay? Some of them is actually because of yield. All right? The 10-year treasury yield can trigger. But important thing that you see this formation. If you see these formations, then you can take advantage. Okay? But here, very obvious one. Why? It's already starting to form. But when it's going to finish, we do not know. Okay? And here itself become very obvious. Why? Very low volume. So that's a telltale sign. Okay? Now later I'll show you more during the Q&A. Then you can understand. This is a stock we traded long time ago, New Silk Road. These stocks nobody want to trade. Why? Never heard before. Before that it was called Digiland. Some people may be familiar with this because of Goh Chok Tong's son. Alright, now okay, very nice. Can you see that? You break. Our bias is follow the previous trend. Our bias means the odds of breaking up is probably like 80%, breakdowns 20%. If I use the word breakdown, easier for you to relate. This is very obvious. It takes so long. In fact, they all fail at the same time. This is the time where in the previous oil cycle, the oil was above $100. In this case, it is Sembcorp Marine. It happens to Sembcorp Industry. It happens to Keppel Corp. It happens to all the offshore marine stock. They all have similar pattern and they all break at the same time. Why? When oil price fall below $100, it's a descending triangle. It break, consolidate, fail. It takes months. It's not weeks, months. Sometimes it takes more than a year. Right? You just have the patience. Here we have a very obvious example. Continue. Right? Break up. Again, you can see the drop in volume. It's just that you need patience. Here we have more like a symmetrical triangle. This is Sembcorp Industry. It was a downtrend. Our bias is to break down. It break up. It break on the ups, and then before it fail, and it plunge all the way down. So in this case, this become a what? The first break. Remember, you need patience, because this thing takes, let's say here, 2 months plus. In fact, I was observing this for short. At that time I was conducting a workshop. I told the student, stand by to short the stock. Stand by to short the stock. And we short nicely. Here's the bearish gap, went all the way down. Because why? This is a false breakup because the trend was down. Right? And this cannot sustain. All right, can you see a series of bull bar? Cannot sustain. And then here, very obvious, closing this gap, and then it gap down. Oh, very nice. All right? So false break is very important. Next, simple patterns, flats and pattern. They're quite similar. They're all very small one. They're all continuation patterns, which means they're part of the trend. Usually occur after a sharp move. I can tell you, a lot of people after a sharp move, they dare not buy. Meaning what? If the stock rally this way, a lot of people did not buy one. They do not buy this breakout one. After a sharp rally, a lot of people have no confidence buying high price. This occur after a sharp move. Flats usually form two parallel lines and pendants converging line. I'll show an example. They are generally short-term pattern. So let's take a look at this. In this case, they are horizontal. So actually, basically, they quite flat because this is the pole, flat pole. All right. Take a look. This is pendant, converging line. So this is different. You can call it a triangle flag. Yeah, converging line. There's a difference between a flag and a pendant. So here again, this is not too long ago. This is COVID there. Riverstone. It was on the way up. We saw this thing. Oh, nice break. Again, we are more likely to break up. Why? Because the prior trend was up. Our bias is there. Okay. And you can see the distinct drop in volume here. Can you see this? So over the last few bar here, volume is so low. Here we have another example on the way down. Yeah, very low volume here. This last two bar failed. And this usually happen after a sharp move. Take a look. Sharp move, flat. Sharp move, flat. Would you buy here? Would you dare to buy here? Without understanding, a lot of people have this fear because they're not used to buy high. It's like paying more than necessary. Right? Isn't it? If you look about our share, right? The value of the shares is subjective one. It's how much people are willing to pay. But you're not very happy paying here on the break because your friend bought it here. You don't feel very happy about it, having paid so much higher price. It doesn't matter, man. Market work on relative one. You must understand. Don't see it absolute. You see absolute, you got problem one. Sharp move, flat, break. Okay. Here on the stock on the way down, sharp move, flat, break. So remember, flat is a continuation pattern, usually happens within a trend. All right. So flag and pendant. Flag is parallel line, pendant converging line. So far, okay? Round top and bottoms, slow reversal pattern. After extended move, often sign of distribution for the top, accumulation at the bottom. So basically like this, you go round, all right, round. So here is actually distributing. At the bottom is accumulation. So these were actually distributions. If you look a bit deeper, is distributing the inventory to people who don't understand. Right? Seriously, I'm not joking. Because for us, we are trading stocks. Let's say assuming stock market, we are trading stock. So we buy inventory and we are just selling it at a higher price. That's all. So here is what distributing to people who do not know and buy at a high price. At the bottom is that the ignorant people sell to the smart people, they are accumulating. So end of the day, it's basically like a trader import and export. No, you buy inventory, you sell inventory. So here you accumulate your inventory at the bottom, and at the top you distribute to whoever want to buy. And if you operate this way well, you make money. So end of the day, at its core, it's like this, no balance between demand and supply, and you must make sure that you're on the side that are winning. Buying pressure is greater, you long. Selling pressure is greater, you sell short. Right? All this reflected in the chart. Now here we are very obvious. This is one of the best performing stock in 2019. Global Invacom. Run up, rounding pattern, break on the upside. Okay. All right. Here at the bottoms, rounding patterns, break on the upside. This is a rounding button at the top. All right. Happens to be part of a trend, which is not so common. Break on the downside. All right. Again, distribution patterns very nicely. The neater it is, the better it is, and the volume tend to be low. All right. Now this happens to be at the top. At the top is different. Tend to be choppy. The volume tend to be fairly high as well. Okay, so this is rounding pattern. Or you can call it saucer. Some people will call it saucer in some of the books. Huh? The next pattern, I think this is probably the last pattern, cup with handle patterns. Slow trend continuation patterns. Is a bullish pattern. Okay, and not too long ago we had it for Meta platform. Right, very nice like that. Handles was actually slight drift downwards. It can be horizontal. Volume is low at the handle. Again, it's easier if I show you example. Take a look at this. This is one of the easiest stock to trade. Unfortunately, was taken private. This is your high P. This is your cup, your handle. So in this case, the handle usually will have lower volume. You must see the volume like dry up. Very important. This is what? A launching pad to break. Here again, another example. So you can see that's very tight, very low volume. And we look for the break on the upside. Here again, handles, the volume must be a drop off. You can see the volume drop off. Before that was high volume and it drop off and then it break up. All right. Now these are the common patterns, but it's useful and understand why the patterns are formed. Huh? Breakouts. Now you came across system breakouts. Breakouts means actually turning upward or downwards from the side. We move, break resistance or break support. Move through resistance or support to new high or new low. Breakouts is caused by the pent-up of release of energy during the built up. So you have triangle. Let's say assuming you have triangle. This is called a built up. After it built up sufficiently, it break and you break with force. Okay, so that's why you have very strong move here. Now this is important. In fact, I rarely share with the public. Only I share with my students. And this whatever material I present, I usually not share with the public. It's only for my student. Okay, so today I decided to do that. All right. Breakout usually achieves to wide range bar or breakaway gap. So when you see a breakout, don't be too happy. You got to make sure that the breakouts is convincing. How do you know it's convincing? Wide range bar. If you don't understand this term, large bar, big bar. Remember, everything is relative in the market. Never look at absolute one. Relatives. A lot of people like to see absolute. Wrong. Relative. They must be relatively large compared to the recent past or breakaway gap. Healthy breakouts should be accompanied with higher volume, relatively higher volume compared to recent past. So we're not interested how many million. We're interested is, did it went up 2-3 times normal average? This is relative. Huh? Take a look at this. Here we have a very nice sideways move, break, big bar, wide range bar. Is it okay? So when you break, don't be too happy here. If you break with small bar, you're in trouble. You may fail. Break, wide range bar. Can you see that? Volume must be high. Again, you have difficulty understand volume. Volume is like energy, it's like force. You need energy to break a wall. Am I right? Same, this is a ceiling. You need energy to break through the ceiling. Here we have a very nice consolidation pattern. In this case, ascending triangle, break with gaps. This is called breakaway gaps. So when you break, you must convincing. How do you convincing? Wide range bar or big bars or gaps. Otherwise, it may have a false breakout. So here we have very nice saucer, and we break with gap, also wide range bar. And the volume is high. Remember, volume represent energy, force. Let's continue. Before that, any questions? Anybody? So far, okay? There are general pointers. It's always safer to trade in the direction of the trend. So you must know uptrend, downtrend. Very simple. Use moving average. Don't need to make it complicated. Good trading systems are actually not complicating one. It's not complicating one. If you see somebody use the chart, wow, there's so many indicators. This person probably don't know how to trade. Right? You look at all the wizard system is simple. Simple, but it's what? Sound. Okay? Chart patterns have high forecasting probability. A chart's patterns will eventually resolve through a breakup. It cannot continue forever. The longer the consolidate, the longer the rest, the more unstable it becomes. You're looking for a breakout. You will have to resolve to a breakout, either break up or break on the downside. Breakouts usually occur in the direction of the prevailing trend. Very important. There's a bias. Our bias, in this case, my bias is up. You can see it's 80% likely to go up, 20% is likely to come down. There is probability. Okay. When the chart pattern fails, it often followed by a powerful move in the opposite directions. I pause here for you to sink in. When a chart pattern fails, it often followed by a powerful move in the opposite direction. Take a look at Indofood. Triangle consolidation, break on the upside, fail. Strong opposite direction. This is Ezone. It stock went up 700%, no? Break on the downside, recover, force breakout, 720%. Here we have ISRA. This is your inverted head and shoulder pattern. Break, fail. Strong opposite directions. Okay. How does charting help you complement your fundamental analysis? This is Riverstone. Okay. I have plotted this moving average. I think this is 30 days simple moving average. It's actually pointing downwards. On this day, there was an announcement. August 2021, 6 August. Record 656% surge in net profit. Is it good? Is it good? Use the word surge, no? Net profit surge 600%, no? Is it solid or not? Solid, right? Isn't it? Just look at the facts. It's solid one. I just draw these two lines. This is a very obvious resistance level. You gap up. You do this. You map out a triangle consolidation pattern. Where was the trainer at that point in time? Ladies and gentlemen, look at the moving average. Is this sloping downward or sloping upward? Is this sloping upward or sloping downward? Okay, no response. You all got difficulty understanding up and down. Anybody got difficulty understanding up or down? Is this sloping up or sloping down? Sloping down, or you all can't understand? Because every time the investor they do opposite one. They like to buy if moving average sloping down one. Seriously. So this sloping down, very obvious sloping down, and we have the result. Actually, follow this, and then what happened? It break. But the result very good. I don't care. The fact that it's going down means what? It probably have nothing to do with this. But we have good result, isn't it? So a lot of people actually look at this only. Fundamental, very good. What? What's gone? Why gone? Very simple. Demand, supply. Who is selling? Institution. Money is leaving. Money is leaving. Whose money? Smart money. If the smart money, which is the clever institutions, are selling, they are not holding the stock, why should retail be buying? It's pretty obvious. You already roll down. And it rests, it break, and you notice the rest. To us, it's very obvious one. It rests, then we're looking for a breakdown again. So I don't care the result because it is on the what? Down cycle. Market is always in the endless cycle. All right. I just started the presentation telling you, right? 4 stages, right? This is what? Down cycle, right? Down can buy or not? Huh? Ladies and gentlemen, can buy or not? Down cycle can buy or not? Cannot, right? So only can short, right? So you must see this. The fundamentals must be in the context. Which cycle is the stock in? No? Here, all the fundamental cannot help you. Here, the fundamental can be a catalyst. Catalyst, a trigger. Good earning, trigger, go up. Here, good earning, gap up, fail. Very obvious. Huh? UG Healthcare, this not alone. Huh? This is pointing downwards. Huh? Deliver net profit of 118. No? This is again good profit. No? But can we can buy a wait. But you buy, it never come out. How? This is Riverstone. You think about it. If you buy, now you're still underwater. No. Before you wait, your opportunity is time. No. Time is wasted. No. So your capital is dying down. No. So you wasted. No. Right. Wasted your capital. No. Isn't it? Right. So remember, if this stock never go up, then what happened? Which is the case. No. For Riverstone, it did not go up. Same for also Top Glove. It didn't go up. And you bought here, assuming you bought at this level. Later, I'll show you a Riverstone. So are you still holding? Gone already. You must understand, leader seldom repeat. I repeat, leader seldom repeat. In the bull market, you have a set of leader. In the next bull market, most of leader are different. Most of the leader are different. Only 20% of past leader repeat. Only 20%. Meaning in the next cycle, will Riverstone run again? Very difficult. Only 20% chance. Again, later I'll show you what happened to Riverstone. Huh? What's a leader mean? Leader are the multiple baggers. These are the one that champion running ahead. Like in the past, recent past, Sembcorp, no? But Sembcorp is gone already. Recent past, Food Empire, no? Okay. Now the leader in front, Dynamic, no? All right. Centurion. No? These are the ones that went up few 100% one. Okay. So you need to understand this, no? Why market go up? Because money is flowing in. Money refer to smart money. Why market go down? Money is leaving. The whole thing move is with institution. Right? How to spot leader is a separate thing. Today I can cover. Okay? Take a look. This is UG Healthcare. Earning very hard. Very good. This is anchor channel, which is a pattern. Feel. Almost the same times as Eurostone. Gone. You can see the moving average. It's down one. Combine one. Did it recover? It's gone already. Again, later I'll show you the charts. This is Genting. I think you are very familiar with Genting. This is recovery thing after COVID. After COVID, it ran up. After that, it did this. And then it failed. And now here, H1 more than triple. H1 profit more than triple. Is it good? It's good. It gap up. And then what happened? Failed. Because it's already down. So institutions are selling. It cannot just go down because retail sell. Institutions are selling. Smart money are leaving. So don't make it complicating. Smart money is leaving. Okay? Smart money leaving. If smart money is leaving, we better go with them. Don't go and fight. You can never fight the storm one. Cannot fight the current one. Okay, this is iFast. This is 2023. Net profit grew 44%. Record. This is the word record. To record 30. Fail. Still fail. Record earning. Still fail. Right? So if you actually look at this, just like this, earning very good. Why you fail? Making a lot of money, why you fail? Why it failed, we didn't know. But at its core, I only know one thing. Nobody buy. Institutions are not buying. They are selling. So if they're selling, I won't buy. And I know this is stage 4, down cycle. Is that okay? This is Alibaba. A lot of people ask me about Alibaba. For the sake of my student, I post in the member site. I tell them never buy. You will drop some more. Okay? So the time I post was at $200. Now $84. Later I'll show you the updated chart. Huh? So here what happened? Alibaba split into 6 companies, pursue IPO. In fact, a lot of people talk about this. A lot of people talk about it. You go watch YouTube video, people talk, wow, very good, very good. Oh, this company very good, very good. To me, I look at it, what's so good about this? Huh? It still goes sideways. I updated the slide for this presentation. It still goes sideways. This is dairy farm. Take a look at 10 November, full year profit expected to be materially lower. Is it good news or bad news? Good news or bad news? Huh? Full year profit expected to be materially lower. Bad news, right? Move up. To me, I can see this is down, this is flat. Right? This is down, this is flat. Means what? The down cycle is over. So even the news is not that good, but it doesn't matter. This is Yang Zijiang. Net profit 47 year to year. Okay, having said this is Tan Po here. The institutions are interested in something. When they buy a company share, can the company make a lot of money or not? They're not interested in profit only. They're interested in earning growth. That means they must have double-digit growth, every quarter, double-digit growth. So what happened was that actually, when they buy a company shares, company must be solid. And then what happened at this point in time, they say fully valued. Now, how they come to their conclusions, they have way one, we don't care, fully valued. So what happened? They will unload one. At this point in time, is the company still making a lot of money? Yes, but they unload already. On the way down, are they still making money? Yes, but institution unload already. All right, and they'll move their fund to another stocks. So the whole cycle just repeat. So remember, at the end of the day, this thing move is because of money flowing to the market. In liquidity, in other words, money is flowing in and institutions are buying. And eventually, when you top up, institutions are selling. And they can sell for a good reason. Recently, it's carry trade. Not because they want to sell the position, because they need to return the loan they take. So maybe the stock is very solid, but they need to return money. So they need to sell the script in order to return money. I'm not too sure you read about it, about a carry trade recent sell down in US. People panic because Japan sell down carry trade, because Japan actually hiked the interest rates. So there were a lot of people who borrowed Japan yen very cheaply and they park their money in states. Now they need to unload states, the script, the security to return money. Does it mean that the company is not doing well? No, it doesn't matter. Not too long ago, we have this Ali lady. You know this stock, Ali lady? It went down very badly. Why? Because of competitor. But they're still making a lot of money. Just because the stock went down quite badly. And then finally it recovered. I think it's likely to oscillate sideways. Again, later got chance, I'll show you. So end of the day, when you look at fundamental, is the context. Is it happen in this second stage? Or it happens on the 4th stage? So you need to understand this because it will help you. Because on the second stage, good earning is a catalyst, catalyst for you to move up. Okay? All right, so this Yang Zijiang, right? Went up, it moved up, moved sideways. This is the distribution pattern, the head and the shoulder pattern. It really failed. Where it failed, people are selling. All right, so they can discount this very quickly. This is iFAST. This is quite recent. February 2024. Net profit rose 300%. No, it is huge, right? Isn't it? Still fail lah. Why fail? Very obvious resistance here. Can you see that? Resistance, and fail. Hey, why like that? Net profit 300% increase there. Supposed to be good, right? I can see the selling of high volume, no? Right? And I know there's a resistance here. People who got trapped here, they probably will sell here also. So once you actually appreciate, understand this, all right, see everything in that context, then the other thing make more sense. Why sometimes good result don't perform? Why sometimes good result it perform? It all depends on context. This is SATS. You know SATS, right? SATS go and buy up a company called WFS. You buy a company called WFS. And then they have to issue rights, right? Which means they need to borrow, basically. And then they dilute, right? You issue rate, dilute the earning, because more share, more people to distribute. So the stock gap down very badly. And this is what happened. One fine day, it delivered full year profit of 56. Before that, it was negative. Lose money. Now full year profit. It gap up. It moved up. This is quite recent, no? May. So I can see this is downward trend line broken, and this is a classic test, and it actually break through the resistance here with a gap. This is a breakaway gap, right? Okay, right now, question answer. Anyway, if you don't have a training system, you can download this ebook. Inside got 2 training system on trend trading. I've actually typed the things onto the chat. So if you wish to, you can use the link there to go and download the ebook if you don't have a training system. Well, if you're curious about what I do inside there, also you can download and read. Meanwhile, anybody has any questions to ask me? This is just to show you an example. This is chart of DBS, and it take 2 years to complete this pattern. 2 years, 2022, 2024. And we have been tracking this for 2 years. Finally, this is where we entered. So it's something that we actually been looking for a long while. Why the trend was up, you rest, and then we're looking for this break. This one is your COVID sell down. Yeah. So we're looking for this to break. And it happens. So it takes a long time, you know. Is this the only stock like this? No, the rest of the bank also, OCBC. In the case of OCBC, it's an ascending triangle. Okay. And it break. All right. SIA, it's not high side, no. All right. It's not high side. This was discussed with my students. Just now we talk about false breakout. This happened. This is SIA. SIA. Can you see there's a break here? Fail, recover. See the move, very powerful. Where say to locate candlesticks? Oh, it doesn't matter. It depends on your trading horizons, but it's good to look at both daily and weekly charts. If you trade Hong Kong and US, it's better to trade a weekly chart because too much noise. It doesn't matter. Interest rate has been going up for a long while already. Interest rate has been going up for a long while. But you need a trigger. That's important. When it trigger, that is important. Yes, I do look at candles. All right. So that's important. Okay. So you need a trigger. If you actually take a look, let me see. Oh dear, what happened? Give me a minute. I thought I have opened it. Just give me a minute. This is your 10-year treasury yield. This is your 10-year treasury yield. The yield has been going up for a long while now. The yield has been going for a long while. Let me just change this to the weekly charts. Then you can see better. I'm going to string it down for you. If you take a look at this is the yield. The yield has been going down for decades. See, this is your 10-year treasury yield. Right? You've been going down for decades now. Let's take a look. This is where you break. This is where you break. Now remember, you have been actually moving up for a long while already. For a long while. So if you take a look at the banks, the banks rest for a long while. Yeah. Take a look how long you rest. 2022 until here, 2024. It rests until here it breaks. So if you decided to buy here for that 2-3 years, you are very frustrated, no? Because it go up, go down, go up, go down, go up like a seesaw. So you need a catalyst. And to me, this is a very obvious place to buy here, right? And you don't even have to buy a lot. They give you 2 dividends, no, 54 cents. And today it's 8 dividends some more. But it's already out already. All right. Along the way, it give you bonus. It give you bonus. And then there were 2 times of dividends, 54 cents each. Okay. So you don't have to buy a lot. You just buy 2 lots. 2 lots. You can see how much you make. Right. So you don't have to jump in and out in a lot of stocks. If you are able to spot something like this, or something like SI, which I show you, or something like Yang Zijiang. All right. All this got force breakout in the fast. Let me see. Do you care about? Yes, I look at candlesticks, but I don't do those candlesticks like people do. I don't do those candlesticks like people do. Okay. So somebody about Yongma. Yongma is a ultra penny stocks. So you just have to think note. It's ultra penny stocks, and this is where we traded. We traded on this flat pattern. Just now I show you flat pattern, right? These are the flat pattern. You can see that. Then this one failed already. So when you do this, right, you'll rest one. You'll rest very long one. So don't have to bother. And some more is an ultra penny stock. Meaning what? Meaning institution cannot participate. Who participate? Syndicate. Yes, syndicate in the market. Yes. So if you take a look at this stock, I draw a lot of lines, right? So these are the support resistance line. So right now, your giant cycle and carry here, we are resistant. After break decision, they are somewhat resistant. So can this stock really run? Difficult. Difficult. All right. What is syndicate? Syndicates are people who actually corner those cheap stocks. It happens everywhere. Singapore, Malaysia, KL, Hong Kong, US. All right. In US, they try to do the pink sheet. All those very cheap stock. Trade OTC one. It's outside the exchange one. Okay. So you avoid penny stocks. My advice is, unless you're a very seasoned trader, because these are usually can be cornered. At one stage, if you know John Show, the chip stock Brumon was cornered by him, right? Isn't it? Of course, he himself got into troubles because Goldman Sachs actually dumped all the share. He couldn't respond in time. All right. So this is not high side. Okay, I just want to actually show you. So actually I have no intention, but just to actually help you to appreciate, understand a little bit better. Okay, let's take a look at this. It's not high side there. Okay, just to show you. I told my student, no, this is Singapore, Malaysia ringgit. We have a very obvious triangle. All right, this is a break. This is the best time to exchange. No, Singapore is the strongest again. I told them this. No? Now let's take a look. Let's take a look. See lah. Your good chance over already. Okay. Nobody believe SPH is the best performing blue chips in 2001. This is very trade. Blue chip. It's gone already. This stock delisted. But we traded. Can you see this now? Are you able to see this now? This is a cup we handle. Break. Run. SPH, no. They're wondering how can you trade SPH? This is what we do. Okay. Meta platform. As mentioned, there is a cup we handle. So I told the student at the time there's a cup we handle. It broke. We have a handle. In case you don't know where is this, let me show you. This is the one. They run. Okay. What type platform is that? Oh, this one Share Investor. It belongs to Share Investor. Oh, it's something that I use. And I want the student not to buy Alibaba. Right? I want the student. Take a look how I want the student. I'm very worried. Because a lot of people like to actually read the news. So I very worried. Just like I show you Alibaba. Oh, you're going to split the 6 company IPO. Don't bother. Okay, take a look. Alibaba. I posted 2021. Regularly cracked down by the Chinese, blah, blah, blah. And then people say, be greedy when others fearful, right? Follow Warren Buffett, right? All right, then examine technical perspectives. So I showed them, Take a look at my statement here. 1326 SMA, which is pointing downward, very much involved, not likely to level anytime soon. My last statement for now is better to be fearful than patiently wait for the market to review. So here, resistance $200. We are just broke the $200. Alibaba, no? Alibaba, $200. Tell the student, never buy. Then you see for yourself, Alibaba now. $80, let's say $80. From 200, no. The time I post. All right. So if you shorter, you make money now, but don't buy. Don't buy. You buy, you're in trouble. Okay. Seventh of March. This is the time I did a video. I told the student, wait for this price to buy 34, 36. This here, I mentioned in the videos, March. And this is what happened. So it's not high side, no. All right, it's not high side. This is the pattern. No? All right, and this chart is adjusted because there is bonus issue. Right? All right. Okay. So these are the things. Once you understand and you know what to look out for. Like I just show you example. This is Yang Ziqiang. Yang Ziqiang has a false break. Here, there's a false break. Okay. Take a look at this. Can you see this? This is a triangle consolidation. Can you see this triangle? It break on the downside. It break on the downside. Run. All right. So this is the link. Talking about the book, the e-books, right? The link, right? So this is false break. So a lot of people do not understand the statement. Once you understand the false break itself, then it becomes interesting, and you have the confidence to trade the opposite side. Imagine you break on the downside and then you go long. A lot of people dare not trade one. Take a look at IFAST. This is recent, no? Take a look at IFAST. Are you able to see that there's a rectangle pattern that's falling? Break on the downside, break, fail, right? Run. Now, a lot of people dare not buy. They dare not buy because they don't understand. To me, it's very obvious. No? It volume very low. It break down. If I use the word breakdown now, because I think easier for you to understand. It recover, break up. All right. So if you understand this enough, you have the confidence. Is that okay? Anybody has any questions you want to ask me? Any more? Oh, somebody mentioned Hoppa. Hoppa, one time the what do you call that? The volume is low lah. Or that's the liquidity lah. So it's something which you got to just note lah. Look at the volume, only 92 lots right? Volume very low one no. So volume low sometimes difficult to actually invest but you only see breakout after it happen. It's not after it happen. It's not happen. Just I show you I didn't play the videos. This is where I posted, I told the student. All right. This is not what they call the high side. It's not like this is not high side, no. Maybe if I okay, I play the video and let you see. All right. The video is on the 12 minutes. Yeah. Very obvious, no, mentioned many times already. So it's very clear, no? Have you break? Not yet. But I already warned already. All right. Likely to break because we're actually telling them to watch this for months already. And every break must have high volume. So I mentioned very clearly the price, but the chart is adjusted because they issue bonus. All right. Which is DBS. So it's not high side, right? Let me just put back this thing here. This is the bar. Break this. And did it have volume? Yes, it went up. All right, it ran. Okay. So Hoppa, the other thing is UMS is weak. It's weak. You can see also, it actually broke on the downside one. You can see this now. It broke on the downside. Very huge throwback, fail again. So the stocks, if you look at medium term, just look at medium term trend now. And I plot moving average line. You can see it's pointing downwards. The slope is downwards. You can't buy one. I'm not too sure anybody here short now, but certainly you cannot buy because it's telling you it's on the down cycle. Bernard, because actually this statement which I made earlier, this statement here. There is psychology behind, but I can't explain due to limitation of time. When a chart pattern fails, it often followed by a powerful move in the opposite direction. That was a statement. Okay, now obviously I look up for certain thing else, but this is a powerful statement. Okay, and a lot of people dare not want. And I show you the iFast, right? Isn't it? Okay, I show you iFast, isn't it? Again, I just repeat now, because the line I draw is still there. Yeah. Did it break down? Yes. Did it recover? Did it run? Yes. So what I'm trying to tell people, a lot of people cannot see. They can't see. All right. And because they can't see, they miss the opportunity, and they're wondering why like that. This is not the first time, no. It happened here also. You see this? Maybe just remove the line. This was in the past when it was beginning run up. This is a multiple bagger, went up 10 from $1 to $10. See this break? See it recover? You run. A lot of people dare not buy one. Right? Because if you do not know, you won't buy. If you do not understand, you won't buy. So what I'm trying to actually do in today's presentation is almost 8:40. We spilled the time. Is to help you to understand by looking at the charts and you put things in context, it makes you a better investor. I want to actually use this here to give you the summary, very quickly, because we run out of time. Market is always in an endless cycle. You must understand this. Okay, this is the up cycle, this is a down cycle, this is distribution, and it failed. Market will never go in a straight line. You will run, you'll rest. When you run, you form pattern. Run again, form pattern. Maybe this. Run again, form pattern. Run again, form pattern. Eventually, it will fail one. Along the way down, you also rest on. Very much like this stock. All right? Very much like this stock that I show you right now. You will actually what? Rest and form pattern. Rest, form pattern. So it's like going from level to level. Right? So once you understand this, you know this is stage 2, second. You know this is stage 3. This is where you're going flat. This is stage 4. So here you buy. Here you short. Don't short, don't buy. If you don't know how to short, don't buy. Why market do this? Money is coming in. Smart money. Why go down? Money is leaving. Once you understand this, put everything in context. Okay. Now, money come from institution, not retail. Retail very small. Money leaving institution. We can follow only. Institution, of course, will base on certain thing, but there's something I can tell you as a retail investor, you have one big advantage. You can never do better fundamental analysis than the institution, but you can see what the institution do with the research because the action are shown in the chart. Did they buy? Did they sell? You can see. Is it okay? Now, history repeat itself in the stock market one. Many price pattern and price concern will continue to repeat over again. The name will change only. Costco is gone already. Costco was a darling, is a leader in the past. It is gone. AM is gone. All right? They were leader in the past. Now gone. So remember, we need to be very flexible. Do not be fixated with the stocks. We have to be very flexible because leaders seldom repeat. Not yet lah. Why not yet? If they're going to cut interest rate, market will not crash. Okay, anyway, this is my website. You can go there at Sprouls, Facebook. Every 2 weeks, I post some videos. All right. And over here, we have the banners. And if you wish to attend some of the free seminars, you can attend. And in this case here, I have one coming up, which I together do it with Philips Security, Cybercode. All right. And this is for a course, which is actually IBF funded course. Meaning what? Meaning you got sponsored from MAS. IBF is Institute Banking and Finance. It is part of Management Monetary Authority of Singapore. It's a division. So this course, which I did with Cybercode Philips Security, is actually funded. So which means you got subsidies. All right. Otherwise, you pay a lot more, but it's now subsidized. All right. So If you wish to actually reach us, you can WhatsApp. Don't call because my staff will be very busy. In case you want to make inquiry, you can actually WhatsApp us or you can actually send us an email. All right. And thank you so much for your attendance. I hope it have been beneficial to you. Okay. I hope we can see things in better perspectives and not just focus on one thing only. How do you know you'll be? How do you know when you'll be organizing? You can go actually look at a lot of banners like this. All right. You just go to my website. My website is srtrader.com. All my students are called the Super Rally Trader. And then there is this banner, right? You click on the banners. So sometimes you got events you can watch. Like here, right? You just see the banners. You can attend the free seminars, right? Like that kind of thing. Huh? You can actually use the banners. The banners will actually give you the details. Thank you. Okay. Wow, I'm very happy, man. Tan, you learned a lot today. I'm very happy. Anybody has any questions? So I hope it have been beneficial. Okay. Now remember, as long as these things, if you look at the moving average line, the long-term moving average line, okay. So you don't need the expert to tell you. You are your expert yourself. Always remember this. Remember just now, there was a quote which I showed you. You can be better one. This is your S&P 500. Okay. Your long-term moving average is still up one. Of course, got correction one. All right. But it's still what? Stage 2. Sure got correction along the way. Never go in one line. Clear? Okay. So there'll be correction, but it's still too early to call it bear market. And especially remember, cheap money is available when the Federal Reserve going to cut interest rate. Low interest rate is conducive for equity market. Just remember that. Okay. All right. So thank you so much and hope to see you again. Oh dear. Somebody was using a Q&A, but was using the chat. But let me see first. Oh, and run out of time already. How do you... Yongma ratio, MA line to use, all depends on MA line. You can use, like just now I mentioned, 20, 30, 50 for medium term lah. Okay, for medium term. All right. So if you short term, you can use 8 days or 13 days. For medium term, you can use 20, 30 or 50. For longer term, you use 100 or 200 lah, the MA line. Okay. China Aviation, I only can off you tell you the stock not much potential lah. Don't need to see lah. TSM after breakup volume did not. TSM. No, I didn't monitor this stock. I'll tell you offhand. All right. Thank you so much. How do you know how long the volume will last? No, a good idea to buy below. All right. Okay, so I will close the meeting now. Let me see, stop share. Okay, catch up with you again.